Hi, my name is Bo Sears. I am the CEO of Helix Exploration. We are a helium explorer with assets in the United States. We are listed on the London AIM market presently.
Very good to see you again. I think we saw you back in April. You just raised 7.5 million bucks, pounds, I should say, even better, real money. And you're about to get after the Ingomar Dome project in Montana, but you've got a little bit of new news for us here today. Tell us all about it.
Absolutely. Thanks for having me, Matthew. Yeah, our new acquisition is called the Rudyard Field. It is a project with known helium concentrations and volumes behind it. It was the right project at the right time. It was available, and so we decided to pick it up. It is just 40 miles south of the Canadian border, where a lot of helium exploration and production is existing right now.
Right, and what did you know about the project that led you to actually want to acquire it?
It's a project I've known about for quite some time. It all stemmed from research long ago. Texaco had drilled a well in 1960, found inert gas at high volumes, prodigious volumes with 1.3 to 1% helium. They plugged the well and went home because they were not after gases that would not burn.
Right. Okay. And so you picked this up from one of your consultants. It doesn't seem to have cost you too much. So what's the extent of the transaction? If you don't mind getting into that.
Sure. It was a good deal at the right price. It was a low cash up front, and because of that, we gave him some shares. He really likes what we're doing. He likes what our team represents. He understands our devotion to the helium exploration space. So we feel it's a good marriage between both parties. We're both incentivized to get active up there and really make the resource a nice one.
But tell me what it does for you, because obviously, when you're starting out, you got to be really efficient with your capital. You don't allocate capital blithely. This has got to really do something for you other than increase the land package. So what was it about this that and what does it add to the Ingomar Dome project story?
It adds to the Ingomar Dome story because it just creates another avenue for more molecules to hit the market, which is incredibly valuable. It is valuable. It's incredibly valuable to have multiple projects that are both geologically and geographically diverse to kind of smooth out the helium production process. For instance, if one plant goes down for scheduled or unscheduled maintenance, the other project can pick up and find some more helium to deliver to the end user. We are fully on board with the Ingomar project. Everything is moving swimmingly. The Rudyard project was just the right deal at the right time. We picked it up at low cost. It's a lower cost to drill because it's shallower depth. We're really excited about it.
Right. Okay. Now, again, so going back to some of the things that you said, because it's quite interesting when companies start out small, full of promises, full of excitement and vigor, and maybe don't necessarily deliver on the things that they say they're going to deliver on for lots of reasons. But you talk about what definitely talks to me about Q3 this year, basically doing a well appraisal on Ingomar. Does this acquisition change anything?
It changes nothing. We are still very much on schedule with Ingomar Dome. Rudyard just fits on the back end of that particular project of the Ingomar Dome.
Right.
So it just brings more molecules to the market, and that's really what we're after. We are here to make an impact in this space and go after projects that add value to our company.
Right. Okay. So the Ingomar Dome is still the flagship. This is an add-on, not a segue and deflection. This is just to build on the optionality later on.
That's correct. Ingomar is our marquee project. It is the one with the most expanse. So it is the one we are focused on primarily. That is not to say we are not going to allocate some resources to Rudyard. We should. We need to. The fact of the matter is we are still in a shortage today, and we need more molecules to fill that need.
Yeah, for sure. U.S. market crying out for this stuff. But again, I'm just trying to get to the kind of commercial imperative here, which is for you to get to the point where you can sort of deliver on this, pressure swing absorption plant we talked about last time. It's going to cost you somewhere between $12.5-15 million to do so. To get to that point, this appraisal well's got to work for you, hasn't it? And it's what? $2.5 million. It's a deep well.
That's right. At Ingomar Dome, we are estimating about $2.5 million to drill and complete this well. But with that information, that's through testing. With that information, we will have an abundance of information from collecting surface and downhole pressure data. That will give us information like prudent flow rates, decline curves, and just overall deliverability. These are really important things to have. And once you have that information, we can hit the debt equity market, debt capital market, and raise money through debt so as not to dilute our current investors.
Right. Okay. And explain how it works, because I think there'll be people watching this who are kind of used to like mining parlance, and there'll be people used to oil and gas. I guess it's going to be a little bit similar to the kind of gas market. How do you, as a company, kind of move through the I guess value building and also qualifying for to be able to get the finance here? So one well, if you gather all that data, it tells you what you want to hear. How quick to commercial reality, i.e. revenue?
It depends on the results of the very first well. If those results are good, we can start drilling development wells because the reserve report from the results from that well will have delineated the field substantially. It will have reduced that risk substantially, so we can add additional drilling. Or go ahead and make the decision to build a small modular PSA plant and put it on site and start producing helium immediately. It's a good option because it allows us to produce helium today as the field is being developed, which can further help us grow organically by drilling more wells.
Okay, so let's bring some people into the tent with regards to some of the language. You talk about delineating fields. You need to kind of manage these fields properly, right? So, you may have the option of going straight out of the gate with one hole. You may need to put some others in. I mean, how does that work generally? For you? You're trying to obviously minimize the amount of spend before. You're trying to minimize the amount of spend. So how do you manage a field?
Exactly. Well, we are very cost conscious, as you might imagine. Helium exploration is a very, very technical business because it requires the processing. It requires the know-how of what to do with it once you have it. One well, depending on the deliverability of those wells, or one well, will allow us to make that decision, whether we're going to add a plant or do we need more development wells, or various and other sundry factors that go into these decisions. It's a very complicated business. We need offtake solutions, which we're working on presently, and armed with that information, things become eminently financeable.
Right, and with the offtake solution, it was clear they're going to come with conditions, because the helium needs to be purified, right? It isn't just we've drilled a hole. There's helium. There's lots of other things that come with it. So in terms of that purification process, is that kind of qualifying standards for the offtake partners?
That's right. In our case, and in most primary helium producers, the value of the gas at the wellhead has no value. Its value is only derived post-processing. So it's very much akin to mining, like gold. You have to take a chunk of rock and you have to mine out the gold that is within that rock. Helium is no different. It's just far more inexpensive than capital-intensive mining equipment. We're using traditional oil and gas equipment and then helium processing to produce a very valuable commodity.
Okay, and let's look at that offtake thing you mentioned there. There's a big market in the U.S., right? There's not a whole bunch of producers. We're running out of this stuff. I think Qatar is a kind of big producer. The Labarge Field, Wyoming, is a big producer. I think jointly 50% of the market. You're not going to have problems selling this stuff, are you?
No. No, we don't anticipate any shortage. In fact, the more supply that hits the market, the rising demand will fall in place. We are still in a shortage. What we don't want to do is become reliant on foreign sources like Qatar, and I don't anticipate us getting any resources from Russia anytime soon. So, as you mentioned, Labarge, ExxonMobil, they are the stewards of the helium industry here in the United States and have been good stewards, but they are maxed out at capacity. We need to bring new volumes to our country, especially because of the CHIPS Act that was passed that is moving all the semiconductor manufacturing to our shores, each of which require massive amounts of helium.
Right. Okay, so the demand's there. And price, I guess, in a market which is deficient, is going to be quite strong. But even so, I've got to ask the question with regards to how how you go about ensuring margin is there. It sounds all very low capex, quick to market, and I think possibly with very keen off takers, maybe you can be quite, I guess, anti-dilutory about the way that you go about funding things. Would I be right?
Yeah. With any helium discovered, you're going to find customers, whether they be the major industrial gas companies or small independents or perhaps direct to the end user market. There is open availability on all parts of the helium value chain. So we have great comfort in our ability to move this helium once we produce it.
Right. Okay. And obviously, you're going to have to try and understand the potential of what's there in terms of the scalability of it. Like, even with high margin projects, you want to understand this kind of scalability of this. So what's the kind of process that you're going to be going through? Because $7.5 million gets you so far. Is the aim, say, right, let's get some revenue flowing, let's get some offtake, let's get some pre-sales going before we go and raise the next capital, or can we expect more fundraisers to kind of expand this kind of exploration phase that companies need to go through?
Yeah, we want to cash flow as quickly as possible, and we want to do that without diluting our shareholders for certain. We believe we have contacted many debt financiers. We believe, and that's a very common approach in my industry. There's a lot of plants today are debt financed, and they do really well. So we're excited about our ability to enhance the value for our shareholders and to bring these projects to fruition.
Well, look, I don't think we need to say much more. We need to step back, let you get on and do your thing. Come back on when you're drilling, and hopefully with some results. I mean, with the drilling, obviously deep holes, it'll take a while. But in terms of the appraisal of the data, how long does that take?
Yeah, it'll take about 2 or 3 weeks, probably 3 weeks on the Ingomar Dome in particular. And Rudyard was probably less than a 2-week ordeal. There's much shallower there, so yeah, the timelines are going very well right now. Everything is going according to plan or better. I'll just put it that way.
Good time to be in helium. Timing's everything, but you guys also seem to know what you're talking about. So, great to speak to you, Bo. Stay in touch. We'll speak to you soon, okay?
Thanks, Matthew.